Hello there, this is James and you're watching Tixee Live. In today's program, we've got quite a fair bit to go through and we have a slight change in mood, but I want to know how long that's going to last. But before we get into that, remember these little videos are for educational purposes only and in no way whatsoever should ever be treated as advice. I do suggest you do your own research and do your own due diligence and of course know the risks at hand before entering any trade. With that out of the way, let's crack on. So what is happening today? Why is today a little bit different than the market was yesterday? Well, in short, we have a little bit of risk on, but with caution. And I'll go into a bit more about why we've got a bit more risk on, but why is there caution? Okay, and I'll describe the reasons, and I'll go through the reasons with you. One of the first things we can tell, well, we've got a bit of risk on, and a bit of good news for a change, is that the S&P 500 could end its 8-week losing streak. 8-week losing streak. The last 8 weeks, obviously, it's been under pressure, along with a number of indices, a number of stocks, and a number of different market activity being on the bearish side. But yesterday, the market got a little bit of a boost and got a little bit hopeful. In fact, it wasn't just the S&P, and we'll have a look at that in a minute. It wasn't just the S&P, but yesterday, by the US closing bell, the Dow Jones had rose by 1.61%, S&P gained 1.99%, and the NASDAQ increased by 2.68%. And NASDAQ in particular, and I've talked a lot about the NASDAQ on this program, has been under immense pressure since the beginning of the year. It closing actually at 2.68% is quite a relief for it. So let's have a quick look, and then we'll go into some of the reasons why this is happening, okay? And why there is still very much caution on the caution in the market as well. So let's have a quick look first of all at the S&P 500. Let's have a look here. 2 seconds. So yeah, as you can see, okay, it's trading now. Bear in mind, I'll talk a little bit more about it, but bear in mind it's been around about 3,900 points. It's trading now above the 4,000 points. It's trading currently at 4,055 points. Now, you remember a couple of days ago, I think it was the beginning of this week, there was a survey done by Bloomberg, okay? Done by Bloomberg by a number of bankers and other analysts in Davos, the economic forum happening there. And the survey was, what was their opinion of where the S&P will close by the end of the year? And 28% in this survey, which was the largest percentage in this survey, they said, in their opinion, the S&P will close between 3,600 points and 3,400 points. So straight away, this sudden change at the end of the week is actually quite refreshing. Let's look at the pool NASDAQ, because that's really been struggling. The NASDAQ is now at 12,257 points. So that's got a boost. And in fact, yesterday, tech stocks in general did really well. Twitter is back up. That's risen, okay, because obviously they had a shareholders meeting, I think 2 days ago, and there's a couple of shareholders about to sue Musk, actually, apparently, on a side note, for his handling of the Twitter deal. But we'll discuss that again later. So yeah, so the NASDAQ is performing quite well. So in general, yesterday was a good day, but the market has a bit of caution. But why is this? Why has the market suddenly, at the end of the week, maybe they're looking forward to the weekend. I don't think so. But at the end of the week, it's had a boost. And bear in mind, we had all that doom and gloom at the beginning of the week. And the main reason why, there's 2 reasons actually. One of the main reasons is Alibaba. Alibaba to the rescue, okay? Alibaba to the rescue. Alibaba yesterday published its first quarter earnings, and it showed an increase of 9%. 9%. Now, if you remember last week, we had other retailers, Target and Walmart, all publishing losses. The fact that Alibaba published a 9% increase in their quarterly profits was a big relief. And in fact, their stock price, their stocks, or their share price, should I say, increased by about 12%. And that gave the whole market a boost, because all we've had recently is bad news for retailers. But this is good news. Let's have a quick look at Alibaba as well. Let's find it here. Here we go. And as you can see, on the back of that, look at that skyrocket. Okay, so that was a really good movement on that. And I guess the market is generally very grateful. But that's not the only reason. That's not the only reason why we've got slight optimism as well. The other reason is that, remember, we discussed the FOMC minutes a couple of days ago, and they came out and they mentioned, the need of doing the 50% basic points in June and July, and the market thought, okay, I think we can handle that. It's not as aggressive, 0.75. But now the market's digested that a little bit more and actually thinks, I think they may even hold back on it. So the market's got hope that they will maybe sort of stop holding back, or maybe be less aggressive with their fight against inflation. So that's also helping. But again, that's just a thought at the moment. It's just a hope. So I don't think that's, and like I say, I think risk on, but I think the market needs to be very cautious. And I'll tell you a little bit more why again in a bit. Other news, the UK has imposed a windfall tax on energy companies. Obviously, energy companies, because of the current crisis with petrol prices and things like this, energy prices, they're making huge profits. So the UK's imposed a windfall tax, which is going to be around about, I think, an extra 5 billion, raise an extra 5 billion. So basically, UK energy firms are going to pay an extra 25% tax for the next 12 months. The reason why the UK is doing this is trying to raise money to help lower income families in the UK. In fact, that quite a few families, about 8 million of them, will get like a payout of £600 to help with their rising costs. So this has given the cable a bit of a boost. We'll look at the cable in a minute. But there is concern that this is going to also affect the UK economy, because BP has said on the back of this, they are going to have to review their investments. Okay, so you might see a little bit of a fight by the energy companies for this windfall tax, but we'll have to look at that, see how that pans out. But anyway, let's have a quick look at the cable, the British pound, US dollar. Give me a second. Where's my mouse gone? Here it is. To stream. Right, let's have a quick look at the cable. Now, we've talked about the cable a lot over the last couple of programs, because it has been on the move. It's given this windfall tax, this thing has given it a bit of a boost. Okay, that's one of the reasons why it's fairly bullish at the moment. It's trading above that level we've been watching for several sessions, 125.49. It's currently trading at 1.2616. There is a potential support at the 50-day moving average, okay, which is just above the 1.2600 level. Okay, so I'm keeping an eye on that. It is above the 50, the 100, and the 200 moving average. Okay, so it has got a bit of a bounce on it. At the same time, the RSI. Okay, remember the RSI? If it's above 70, something's overbought, could be sold off. Under 30, oversold, could be bought, so it could rise again. It's not at any of those two levels at the moment, so it does maybe give us an indication there may be a bit of more of a way for the cable to, or the British pound to increase against the dollar. So yeah, that's where we are with that. The other reason, what's a quick swig of water? That's better. Excuse me. The other reason why the cable is quite strong against the dollar at the moment is we have got a very weak dollar. Okay, the dollar is weak. So cable, the British pound is benefiting, and several pairs are benefiting as well. So we do have a slightly weaker dollar, and we can see that slightly with the euro. Okay, euro is still teasing with that trend line we're putting in. It's still trading around that level, currently trading at 1.07379. Not really about the talk of the ECB anymore. That sort of died down. The market's not talking about that at the moment. It's really down to the fact that we have a weak dollar. Gold is trading at $1,859 an ounce, still below that key level of $1,865 and 57 cents, above the 200-day moving average and above the 100-day moving average. So we'll have to keep an eye on how the US dollar, how gold is doing, and seeing if we get continued weak US dollar throughout the session. So that is quite interesting. Okay, markets, how the Europe is open so far, slightly tepid, I would say. FTSE minus 0.9% at the moment, DAX plus 0.19%, and Eurostoxx plus 0.39%. So not the rally we saw for the US indices, but, slightly tepid, but there is still a little bit of, like I say, risk-on attitude. Up next, and this is happening at 12:30 UTC, okay? And this could put a damper on the mood, and that is the US core PCE, and that's personal consumption expenditure, personal consumption expenditure, okay? Expectation 0.3%. What is that, James? What is that? Well, that is a percentage of the amount a consumer spends a month. So this is what this information will give us. So that would be quite interesting. That comes out at 12:30 UTC. Don't forget, 30 minutes after that, at 1 p.m. UTC, I will do a second live, my afternoon live, where I'll cover that and discuss that. Okay, so let's keep a close eye on that. And like I say, at the end of the day, we've got risk-on attitude in the market at the moment. Okay, but I think, like I say, it could be just a minor optimism at the moment. Alibaba has definitely helped us. There's thoughts of the US rate hikes are helping, but I don't know how long this will last because the inflation is not going away and other retailers won't perform as well as Alibaba. So that is the thing. Anyway, if you're watching, don't forget, you can always ask me questions when I'm live on air. This is what I'm here for. And I will be going back on air in the US session at 1 p.m. UTC. So I hope to see you there. If there's any questions, please feel free to ask me any questions if there's any questions. This is what I'm here for. And there is no questions at the moment, but not a problem. If you have a question for me later, add it on the comments below, and I will see it, and I will answer it live on air when I come back on. So don't forget, you've always got that option too. Okay, so no questions. So anyway, if you're watching me on Facebook and you like it, give us a follow. If you're watching us on YouTube and you like it, subscribe if you like. Click the notification button so you know when I'm going live again. If you found this little video insightful, maybe entertaining and useful, give me one of these. Put a smile on my face for the rest of the day. I would like that. But on that note, remember, these videos are for educational purposes only, and in no way whatsoever should ever be treated as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.